And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon to my futures family. It is time for the reflection. The end of the day. The day is over. Tuesday, April 11th is history. Take a deep breath, relax. What happened in the markets? Well, we had a pretty good rally going in the S&Ps and even in the Nasdaq, but that fell apart right at the end of the day. S&Ps basically closed flat on the day. Nasdaq down approximately 84 points, 0.6%, and the Dow higher, over about 105 ticks higher at 0.3% higher. Crude oil closed higher, 81.53. That's $1.79 higher on the day, up 2.24%. Really interesting opportunity in crude oil today. We talked about that on the market prep this morning. We'll take a look at that in the charts here just in a few minutes here. But as far as talking Feds today, we had Williams saying some core service inflation has not budged yet. Core services, that's without housing, right? So core services inflation hasn't budged yet. One more rate hike is a reasonable start. A reasonable starting place, he says. We, of course, will be driven by data. Goolsbee, a little while ago, said job markets have been unbelievably strong. Feels like it's cooling a bit. The Fed must exercise caution when raising interest rates. Thank you very much for that, Fed person Goolsbee. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome on the market reflection, the market prep, and everything we do here. As always, make sure you subscribe to our YouTube channel so you get notifications when we do go live. So, interesting trading day. If you were with us for Make Hogue Money, we took a long early today. We put in a stop, we put in a profit target. The profit target was 41.55. We did not quite get there, but I did not hold the position all the way till it hit the profit target or it hit the stop. When we were having trouble holding price over the overnight high, I said, this doesn't feel right. So we ended up taking about, I think, 16 points on about a 8-point risk. So we ended up about 2-1 in that trade. So it was a good trade, and thank you all for coming up with the idea. We managed it well, and didn't quite get to our potential profit target, but we did get out pretty well. I think we'll take a look on the chart here, and got to remember where we got out, where we got in, but I have to be looking at the charts to do that. So thank you very much. Tomorrow, of course, we know it's CPI 7:30. We have Barkin at 8:10 Central. We have mortgage applications at 6 a.m. So we'll see what the mortgage rates have been doing. We also have the petroleum status report and FOMC minutes tomorrow, jobless claims as usual on Thursdays, and also the PPI final demand on Thursday. So we do have a pretty long list on Friday as well. Retail sales, import, export, industrial production, business inventories, and Michigan consumer sentiment on Friday. So we do have quite a bit of economic data still due out for the rest of the week, the thicker part of the week. Don't forget, Friday, technically, earnings have already started, But we start with the big banks on Friday morning. Good afternoon, everyone. Dan Trader, it's good to see you. Hope things are going well. George. Lacey was a little upset with me this afternoon because I had to let somebody in the house. We got a new furnace and air conditioner. They had to come and charge the air conditioner. So she wasn't all that happy when I tried to keep her in the room. But she did meet the air conditioning guy, and they were fast friends. Nasdaq, good afternoon. JT and Bluebell, that was a cute picture you sent me, JT. I really appreciate those. Nasdaq, yeah, what a flush down site. See what happens when you don't wear the rally sweat. You're right. I took it off. I did not have it on, and see what happens to the market. My goodness. Well, I guess I'm going to be wearing that rally sweater and sweating in the middle of summer. Maybe we'll have to find something else that works. Good afternoon, Scott. Danny. Good morning, or good afternoon, I should say. Haggle Matters. Good afternoon. We made out pretty well on that make hog money trade. Yep. My zone was ringing in your ears, JT. Yeah, I guess it probably was, right? That's the level you were looking at for an opportunity, it looks like. Hopefully you made some money on that pullback off there this afternoon. Robert, good afternoon. Scott, consensus CPI has been updated to 0.2%, lowered from 0.3%. Should be interesting day tomorrow. Was stopped out on that trade by one tick. Don't you just hate that, Robert? I left the stop on that trade right where it was until I was relatively convinced we were not coming back, but I never did even bring it to break even on that trade. I brought it to below the low of the regular trading hour session. So I did trim it just a little bit, but not by much. Every time I do that, the market senses it and comes and gets my stop, and then the trade plays without me. I hate that. It's like getting smacked in the head twice. So let's go ahead and jump in. We'll take a quick look through the charts here. We're going to start with the daily in crude, which we talked about a big opportunity coming away from the weekly kickoff low. I was looking more for an opportunity for an acceptance below the weekly kickoff low, 79.60. We didn't get that. As a matter of fact, by the time the regular trading hours opened, we were back above it. We left the opening range at the low of the regular trading hours session, and look what happened. These weekly kickoff levels are levels that I'm looking for other longer time frame traders to enter the marketplace. Don't know if that happened today until tomorrow morning when we see open interest. If there was a big boost in open interest, we'll have an idea that it's probably a little bit longer time frame trader than just day traders that push this market higher. But look at the range we've been in. We were looking at this, which was the composite profile this morning, maybe starting to get a little bit more even. But value low, value high, continuation, last week's high, extreme. Last week's low, extreme. Here's the TPO. What did we have? Pretty much trend day. Maybe a double distribution-ish trend day, but we closed very, very well. Closed strong. Where was that price? 81.53. 81.53. That's going to somewhat be close to a late spike at the end of the day today. Now, look at the S&Ps. Where did we start the day? Well, we started the day pretty much right here, centrally located. I hope everybody's well hedged or positioned for tomorrow morning. Here's what we did. So we had a late spike. We opened above the late spike. We drove to past the base of the late spike to almost where the late spike began, which was down here. We got it long at 33 in make hog money. We had our stop at 26, below the point of control from the previous session. Well, we were looking for a move all the way up to 41.55. When the market started stalling above the overnight high, I said, I think we're probably going to just take this trade. I don't want to risk too much of the profit, so We got out, I'm pretty sure, right around 49, 41, 49. So 6 points short of our actual target, but it turned out to be the right thing to do because, boy, this market came off strong at the end of the day. So basically, we just brought it right back to settlement, and you can see that on the daily chart. Here's the TPO chart. 33 is where we got long. Boy, the market came all the way back down to that. If we just left that stop at break even, we would have gotten hit at the end of the day. That would have been a shame. No, we got out all the way up here. Thought it was a pretty good job. I think we were in that trade for 4.5 hours. And just sitting here and watching it rotate higher and rotate higher and rotate higher. What gave me the confidence to try and stay in that trade for that long? The only thing really was every time we put in another high here, Delta kept falling. Delta kept kind of, we'd run into more longer, short time frame sellers looking at possible longer time frame buyers. So it was really the Delta staying negative most of the way up that kept me really looking at this as a potential continuation to the upside. It wasn't until Delta was positive and we started stalling that I said, I think we're going to get out of this trade. We're going to get out of this trade. All right, so here's the TPO chart. What did we do today? Normal variation trading day. IB, neither extreme. Normal variation, neutral day. Points of control centrally located, even though we extended the range on both sides, and more so on the upside, it's kind of a neutral day. A lot of two-sided trading, ish, by the end of the session, and a lot of preparation for the situation coming out tomorrow morning. Here's the Nasdaq, which is a completely different story. Here's the daily. We closed lower. We were lower pretty much the better part of the day. Here's settlement. We did not open above the range. We did not open above a spike. We opened in range and in value. Well, we didn't really change the value much, did we? Here's value from today inside the value from yesterday. It was a repair day. Take a look at these TPOs. I want to go without the overnight. What did we do? We opened. We traded to the point of control up here, and we tried to trade to a point of control down here. This was a repair day. 2 days, 3 days worth of repair. There wasn't a lot of time or volume expended here. When we opened there, the market just kind of filled in those holes. Markets are extremely visual. Why is this not working? There we go. How about gold? Not a lot today. Holding the line. Holding that line. The upside structure remains. We were thinking yesterday we lost 2,600. Probably long liquidation. That long liquidation took enough selling power out of the market to hold the line today. Here's the 30. Here's where we opened. Laid bull flag. We held it at least. We didn't get directional, but at least we held it. Here's I see the question, Scott. You explain why negative delta helped you stay in the trade. Well, look at gold. So gold opened here. And it started to try and push lower. But price over the day kept moving higher till the close. Then it just fell into range. But if you look at Delta continued to decrease in value. Negative Delta against direction. That's a divergence. When I see that, it gives me the idea, or at least the inclination, that the more aggressive traders, which are using market orders to hit bids, aren't able to move price in that direction. There seems to be something else, another force, if you will, use the force, Luke, another force in the marketplace. And that force, when we see delta increasing in negativity or decreasing in value, and price moving in the opposite direction, that there are possibly longer, stronger buyers in the marketplace. The longer time frame, the other time frame traders don't use market orders when they're creating and execute, when they're creating an inventory. They will work bids, and they work bids and they work bids until they can't get anything else bought there. And then they move those bids up. And they work those bids and add to those bids as the shorter time frame market order hitting traders sell that new higher level. And as soon as they can't get any more bought there, they move it up and they place bids and place bids and place bids. And the short time frame traders using market orders to hit those bids continue to push delta lower. So we can kind of get a sense, if you will, Scott, that there is a longer, stronger, bigger presence in the marketplace because the more aggressive traders are hitting bids. Shouldn't that technically bring price lower? If aggressive sellers are hitting bids, price should go lower. When it doesn't, it tells you something. When it doesn't, it tells you something. So when we'll know tomorrow, when we look at open interest in gold, that if that is a truth. You know, sometimes the longer time frame traders may be exiting shorts by placing bids and doing it this way. But if there's an increase in open interest tomorrow morning in gold, we can pretty much, bet on the idea that the longer time frame were the impetus of the move to the upside today versus shorter time frame, weaker hands traders. Always fascinating, these markets. All right. Here's the euro. So upside structure remains. Here's the 30. Just following our channel here. The high came later on in the session. There was no gap close. The high of the day came, again, late in the session. It was probably 2 hours into the session that we had this opportunity to trade against this level, but it ended up being the best trade location of the regular trading hour session. Here's the TPO chart. Well, we took out two real, even you could say 4 visuals today. TPO point of control, volume point of control, volume point of control, TPO point of control. Took out 4 of them today. No real visual levels above anymore. Plenty below. We break that trend line. You have to see what happens. Here's the 10 years. Scott, you'll be reading Mind Over Markets for years. I've been reading it for 30 years. All right. Contact. More contact today. Rates. What did they do today? 3.4%. This morning it was 3.4%. No change in rates. Well, no real change in price either. Just a rotational day. higher, overnight inventory long, shorter, overnight inventory getting too short, coming right back into value, relatively close to settlement. Not a big thing here today. What about the profile? Are we seeing anything in that? A little excess on the high here, low excess low, normal variation, extreme to the downside, another normal variation, extreme to the downside here, and another normal variation, extreme to the downside here, and another normal variation, extreme to the downside here. Rates going to be heading higher at the beginning of May. Here's the natural gas. So here we're kind of, looking at yesterday's bullish engulfing pattern, but no real momentum off this today. Really just range bound, taking out the entire range from yesterday. A lot of indecision. A lot of indecision in this market. Take a look at the TPO chart. Very even bell curve, taking out both sides of the range from yesterday. Excess on the high, excess on the low. A lot of indecision. A lot of indecision in that market today. So, this day in history, Napoleon abdicates the throne and is exiled to Elba in 1814. 1921, the first live sporting event is broadcast on the radio. In 2004, Phil Mickelson wins his first major. 1970, Apollo 13 launches today to the moon. I remember watching that in class in grade school. Cher wins Best Actress Oscar for Moonstruck in 1988 today. 1961, Bob Dylan plays his first major gig in New York City today. What about in music? I didn't see a whole lot. In 1981, Eddie Van Halen marries actress Valerie Bertinelli. 1981. I can't believe that happened. That was then, because what was it, 1978 when that first album came out? I think I was a freshman in high school. In 1970, Peter Green quit Fleetwood Mac. Talk about bad career choice there. But he quit, but he agreed to, he was contractually required to finish the tour. But while he was touring in late March 1970, Green took LSD at a party in Munich, and that was cited by Fleetwood Mac manager Clifford Davis as the crucial point in his mental decline. Tom Jones performed the New Musical Express, the Beatles, Rolling Stones, Kinks, The Animals, Herman's Hermits, Moody Blues. Boy, that would have been a heck of a show. 1956, traveling from Amarillo to Nashville, the plane that Elvis Presley was flying on developed engine trouble and was forced to make an emergency landing. The incident created a fear of flying in Elvis Presley, and that would have created a fear of flying in me. 1958, Hank Williams' "Your Cheatin' Heart" was number one on the Billboard Country chart today. As far as birthdays are concerned, not a lot of people that I recognize. Crazy. Anyways. All right. Yeah. Right. At least he avoided any kind of love triangle. Yeah, that was That was something that really, I think, fired off a lot of good music, but I'm sure it was very uncomfortable at times, right? So, all right. Well, tomorrow's a big day. Make sure you rest up. Be kind to yourself. Be kind to each other. Say a prayer for peace. I'll see you tomorrow morning on the market prep at 7:45, and I'll look forward to seeing you at the afternoon session of Make Hogue Money tomorrow after all the fireworks, and we'll see what we find. We'll see what we figure out. Have a wonderful night. Again, be kind to yourself and others. Pray for peace. And I will see you in the morning. Have a good night.